This is Michael O'Loughlin, managing partner of our Argonaut Global and U.S. ambassador to the MENA Fintech Association. Michael, welcome back to the show.
Great to be back. Good morning.
Good morning to you, Michael. So, Michael, we've talked about this off camera, but something I want to discuss, first question right off the bat, is you say that stablecoins have quietly become an infrastructure story instead of a crypto story. So what's changed here?
That's a great question. I think for years, the stablecoin conversation has really dominated, and has been dominated by crypto enthusiasts, traders, and speculation. And what I'm seeing is that that's really changing now. The conversation's really, I would describe it as it's grown up. So today, the most interesting conversations are around stablecoins are really happening, surprisingly, inside banks, inside payments companies, and inside financial institutions and regulators. And I guess the question is why? And what I'm observing is that it's because they're solving stablecoins. They're solving an old problem. Money moves surprisingly slow. Despite having the internet, it's still expensive. It's still fragmented, and particularly across borders. So stablecoins, what they promise and what they offer is the potential for solving faster settlement, lower costs, greater transparency, and 24/7 movement of value. Now, that's quite unique. So the important thing is that people are increasingly discussing them not as investments necessarily, but actually as infrastructure. And the winners in the stablecoin area, it's not going to be the stablecoins themselves. It's going to be, I guess, the companies that focus on the rails, things like compliance, identity, custody, payments, risk management. So really, if I was to leave you with anything from the stablecoin area, it would be that the conversation's really matured. It's grown up in the last few months, not necessarily years. And it's no longer about speculation. It's back to what I just said. It's about infrastructure. That would be stablecoin.
All right. So, Mike, in just like a blunt version, are they the new payment rails or just crypto with better PR?
That's a great question. I think I wouldn't describe it as crypto with better PR, but I would describe it that, the whole crypto arena has resulted in, or has acted as a catalyst for these regulations that were necessary to actually bring a whole industry forward. So I would describe the crypto with better PR as a clever play on words, but not necessarily where we're at today.
Okay, so let's go ahead and talk a little bit more about open finance. You frame it as a fight over who owns the story of your financial life. So in plain terms, for someone watching this morning, who actually owns your financial data right now? Is it your bank or is it your phone?
Great question. I think, and you could give two very different answers. I think just to take a step back a bit, it would be, most people don't realize how fragmented their own financial lives are. And what I mean by that is when you look at open finance, if you take a step back, you actually look at your own personal finance and you think, well, I have a bank account. I may have multiple credit cards, multiple investment accounts, in some cases, retirement savings, insurance policies, payment apps. Now, it's a lot to be handling, and it's all sitting in various different places. So open finance is really about customers or consumers, in this case, taking control of that data, something that hasn't necessarily been done in one place. So to your question, who owns the story of your financial life? Traditionally, it's been the banks, the custodians of the data and your hard-earned cash, I think what we're noticing now is it's increasingly customers and consumers want more from their banks. So they're expecting a level of transparency that banks just never had to give. And with open finance, that data flow and the money flow is becoming way more transparent. And that's a good thing. So I think the overall winners in this space we're going to see is the people actually focus on trust. So open finance, I would argue, is really about the trust factor. And that's where the debate lies.
All right, Mike. So big tech, let's talk a little bit more about that. It keeps inching closer to money, to your money. But big tech argues that they don't want to become a bank. So what do they want that's worth more than being a bank?
I think big tech's possibly the most fascinating trend we're going to see. And it's going to continue to be that. It's kind of hiding in plain sight. It's the beast. People often ask, are technology companies, becoming banks? I don't think that's really the right question. You kind of phrased it in that way. I think you have to ask yourself, what do companies really want? That's more valuable than being a bank, and that's the customer relationship. So I would argue that if you control the spending, or if you not control, if you influence the spending, and if you influence borrowing, and if you influence investing, or indeed consumer behavior, that's where it all lies at the end of the day. Banks traditionally have owned that relationship. They've spent millions on this all around the world with their marketing, trying to remain in front of the customer. But if a customer wakes up and the first thing they lean to is big tech, which we all do, I think that's where the emerging competition is. So I would say big tech, it doesn't necessarily want to be a bank, but it does want the customer relationship.
All right. So at the end of the day, when you tie this all back to one thing, to one word, it's about control. So for the average person watching and they're waking up this morning, where are they already losing control of their money or their data without even noticing? Is that something that's happening right now?
I think we all give away our data freely every day. Every type of behavior that we log on to things, we give away passwords. We show where we are geographically at every moment in time. We comment on things. We share personal images. But should people be worried? I think that's really the question, And I would say no, quite simply. Why? Because I don't think people should be worried, but they should be paying attention, because institutions that earn trust over the next decade, they're the institutions that are going to win. And really, if you can put these things together, trust, technology, regulation, and customer experience, all four, the company that actually packages those together, they're the ones that will win the customer mindset, a win over the customer's hearts as well.
And so I think for the average person also watching this and they want to know who actually controls your financial life right now, who should we be worried about regarding this answer?
So a lot of people would say that the big tech control everything that you're doing. But in reality, I think consumer autonomy over their data is going to become a bigger debate. And this goes across governments, across regulators around the world. We're going to see people start to monetize their own data. If like we have GDPR in Europe, but in America now, we're going to see an awful lot of individuals granting access to their behaviors. And with that behavior, you can package and say, I will let you observe where I go Monday to Friday to a certain company. And they'll actually be able to monetize that because that's interesting to these big tech companies. And right now we're observing that an awful lot of these big tech and small tech, it depends what app is on your phone nowadays, they're actually currently taking that data for free. And what we're going to notice is a shift in the marketplace where people start to actually sit up and say, hey, I can monetize my own movements.
Well, it's definitely going to be interesting to see how this continues to play out later on as the years pass on, and also as countries start making different rules and regulations. So it's definitely going to be fascinating to see how this all plays out. So Michael Lachlan, thank you so much for joining us today here on Capital Markets.